Let's first, please, gain some perspective. Nvidia's stock is still up 108% for the year despite the company reporting a stellar quarter. Did you know that the S&P 500 still has that as its greatest performer? It's the $638 billion business as well. Its stock has increased by almost 23% so far this year, so I'll bet you already knew it was that huge. Why then are their shares finally maturing? It's due to a recent, unfavorable AI storyline. We are aware that the massive corporations referred to as the Magnificent Seven, or hyperscalers, have been blowing money on AI infrastructure. Nowadays, it's often accepted that since they're overspending, their situation is unsustainable. This is the number of people who read about Nvidia's relative underperformance. What was the real motivator? It was Nvidia, which had emerged as the focal point of the IT community's hate. How unfavorable. All right, this isn't fiction. I heard a discussion today on the duration of the Nvidia share bear markets haunting us. The market that is in decline. Even though it was down almost 30 points from its peak, this stock continues to be the best performing one in the S&P 500 year to date. For some reason they failed to mention. How did this momentum stock get back on track? It is dangerous to draw any conclusions other than the following one from the movements of stocks like Nvidia, Broadridge, or even JP Morgan. The visceral positive action in the alternative energy stocks may be related to Vice President Harris's stance on carbon emissions from last night. That makes perfect sense, yet they essentially resolved the supply issue rather than the demand issue. The demand is enormous. Lastly, there are concerns that a recession may be approaching, affecting a wide range of tech hardware and eventually affecting semis. Nonetheless, the economy will benefit from an easing cycle when the Fed lowers interest rates next week. Goodbye. Additionally, we received a stunningly positive yet critical report from Oracle this evening. A lot of the positive news was released in tandem with AI data centers. Hey, not too terrible. Ultimately, I believe that the chip stocks have been knocked off excessively. All the reasons that made us like this band earlier in the year still stand. There is a true spending boom in AI. The infrastructure is being built out at a tremendous cost, as Oracle informed us this evening. More significantly, chips are more than just AI. We have been coming out of an oversupply phase in the semiconductor business for the last few quarters, and we are now seeing some very strong sales increases. Yes, we are ascending. We have passed the point of equilibrium. July marked the fourth consecutive month of sequential sales improvement for the semis. Is it truly your intention to leave this group as we are about to emerge from a glut of supply? When you're entering one, you ought to do it. Although I would love to beat the table on Nvidia, I still believe that we should hold off until the big money comes out of that one. Before the stock can truly collapse, too many summer troops and sunny patriots need to raise their white flags. Today, I heard someone refer to it as a no man's land. That's nice. In addition, compared to Nvidia, you can discover more savings from other chip manufacturers. In December of last year, AMD predicted $2 billion in sales for the MI300 by the year 2024. They increased the estimated sales to $3.5 billion in late January and to $4 billion in late April. The most recent time they raised it to $4.5 billion was in July. For God's sake, what does the market cap mean? AMD really had a pretty solid quarter overall, with moderate sales and earnings beating expectations, and the company providing better than expected forecasts for the upcoming quarter. The announcement caused the stock to rise 4%. I believed it to be correct, but that was just prior to the collapse of the yen carry trade, which completely destroyed the market. It seems as though nobody remembers that the great quarter ever took place. You claim that, at least in contrast to the previous major tech bubble, there is no AI bubble. You compared it to 52 times ahead earnings in 2024 times forward earnings currently. Income margin net, 16% in the past, 28% currently. When do you decide, though, that they are now inexpensive enough for you to let people who are not in them perhaps start to establish a position? Where do you find that? When do you say that? Yes, I agree that you should make a list of the businesses you hope to acquire in the long run. Nvidia is about 25% below its 52-week high. Charles, to put that valuation in context, the stock is currently trading at a forward PE that is greater than 36 times. They are the world's largest and most successful chip manufacturer, producing the most sophisticated semiconductors, and they trade at a lower valuation than Chipotle, the burrito company. Okay, so I'm delighted you brought up Nvidia because it is, without a doubt, at the storm's epicenter, or the eye of it. Nvidia is the pacesetter. The problem is that a number of well-known billionaire investors have sold off recently. Ken Griffin sold 9 million shares, which is a lot. 3 million shares were sold by David Tepper. 1.55 million shares were sold by Druckenmiller. These are the biggest and smartest people on Wall Street, Steve Cohen, I mean. Nvidia is now portrayed as the dumb money play. To that, how would you respond? It would be fascinating to know what proportion of their portfolios were Nvidia heavy, in my opinion. Are they simply taking a portion of the revenues there and cutting others? I find the Oracle narrative and the recent upswing in the company to be quite fascinating. Thus, software has struggled, and you've had the hyperscalers and Nvidia's tools and shovels. This collaboration with AWS is what we seen with Oracle's report from yesterday night and the subsequent uptick. It seems that the customer can continue to use the Oracle platform and tools in the background, regardless of who they select as a hyperscaler. I believe that the extremely robust revenue funnel you've observed is only another proof that the AI story is still in its early to middle stages. To be honest with you, I think it's amazing that it's expanding beyond shovels and picks as well. I do have subscribers in Oracle, so hopefully. Whatever the case, my next guest advises sticking with the apparent choice. He still believes that Nvidia has a lot of promise and is a bullish stock. John Porter, Chief Investment Officer at Newton Investment Management, has joined us. John, the chip company is cyclical. They experience cycles. The crux of the argument, in my opinion, is whether or not you believe Nvidia will suffer one of the several setbacks the sector frequently encounters. Chris Grantham argued the other day that it can perhaps sidestep some of the previous cyclical difficulties the business has faced. Yes, Kelly, you raise a valid point, and there are certain cyclical obstacles to consider. Indeed, there are a lot of cyclical headwinds in the semiconductor industry right now if you look outside of AI. However, there are instances when it is beneficial to take a broader view and recognize the bigger picture. As investors, we frequently overcomplicate situations when there is a clear, simple story that has to be the main focus. For Nvidia, I consider the current state of artificial intelligence. You heard what Oracle and many others had to say last night. I wholeheartedly agree that artificial intelligence is a revolutionary technology. Indeed, there are still unanswered concerns regarding the use cases, but this is likely to be a game-changing piece of technology. Investing in infrastructure is necessary. In terms of the infrastructure rollout needed to support AI, Nvidia is without a doubt the most significant and well-positioned firm. Nvidia is currently trading at 30 times the projected earnings for the next 12 months. You know, despite what you might think given how frequently it is discussed, this is not a bubble stock. Correct? But that's not a bubble at 30 times earnings. Mutual fund holdings are one of the biggest underweights available when you look at them. Despite all of the excitement and attention Nvidia has received over the past few years, I just believe that the risk-reward is quite appealing. It's interesting to note that the mutual fund industry considers it underweight. Perhaps that community is the only one. Just to reiterate, you could have looked at the shares back when it was a $3 trillion corporation and said, they could double from here. That's why I brought up the market cap issue. Will it truly be a $6 trillion brand though? Many investors stated, well, I don't want to stick around for a 10% or 20% gain when I might have a 40% downside, because it is still $2.6 trillion. I would like to attend the double. Can this business have a $5 trillion market capitalization? It's challenging to determine. There's nothing I wouldn't rule out. Kelly, I believe you raise a very valid question. However, the same question was being asked about a year and a half ago, when it was $1 billion, $1.5 billion. Here we have a stock that has increased by between 125% and 130% so far this year, yet it is still just 30 times profits. That would be my main concern. It seems like a really difficult effort to understand this stock's earnings power. It's among the difficulties.